Wednesday, July 5th. Market analysis, Stan Ehrlich, and here we go. Hope you guys had a great 4th of July. Here in California, the weather was just a hair warm, but the sun was out and weather was great. Classic 4th of July weather. Okay. We always start out with indexes, stock indexes, and the S&P 500 in particular. Now, those of you who have been listening to my YouTubes know that I was expecting a break down to close a gap that was very early in June, June 1 through 2, first couple of days of June. Spider has a small gap, but it's there. It's also at the bottom of support area. It's also in the area of a bull trend line. That was a few days ago or a week ago. So now you're going to be pushing below the trend line if that gap is closed. What have we got the last couple days? First of all, Friday was a strong up day, and we gapped up right up to the previous rally highs and closed below the previous rally highs that were overbought June 15 and 16. Two things. Gaps are almost always closed. The implication is we're going to come down and close the gap from last Thursday to Friday. Monday was a semi-full trading day. We had an abbreviated session. The markets closed approximately 3 hours early. So the vertical bars are relatively small and to be taken with a little grain of salt because it was a holiday situation, period. Today, we're back in the groove again, gapped down a little bit, rallied back up close to the high of Monday, and more importantly, Friday. Friday is the highest high for this major bull market. I call it the bull market of 2023. I started calling that shortly after October 13th, where my trading system, the ER signals, caught the exact low day in a lot of individual stocks and indexes. We picked the low, the end of the bear market of 2022 and the beginning of 2023's bull market. So back to our current situation, I think there's a decent chance this could go down as a minor double top. I don't see it sliding at the moment. We opened on the low. We came up near the highs of Monday and last Friday, more importantly, last Friday. We stalled out a little bit. Let's take a look at the 1-minute chart for a few moments. And here we opened lower. We started to come back up toward those highs of Monday and last Friday. Stalled out, slipped off fairly decently, and came back a little. Now, I'd like to see it dropping off below 442.70 and make some new lows for the day before the close. Currently, by the way, 10:30 California time, we got 2.5 hours before the close. Plenty of time. And be a little more convincing about the double top forming. Again, that is the spider, and I usually try to make parallels with the other indexes or vice versa, given the situations. So double top, maybe. If that's true, the breakout is not until you go below on a closing basis, June 26th low. And that would be about 431. So we got to get down 12 points in order to just break out of this formation. And then theoretically, the downside objective is 12 points below 431. So you're looking at 29. The gap is going to be closed at 422.3, 423.80. So it all works out approximately, and that's okay, that this formation, if it forms, will give us enough downside potential to close the gap, and then new historic highs, well, not new historic, then new highs for the major move for over a year, and keep on going and going until it gets overbought again. The question I have in my mind is, did that already happen? Did we already get the attempt to go down and close the gap, for instance, on the DIA at 332, and we only got down to 335, 336? Kind of looks a little like it, but we're stalling out these last couple of days. So we came close to previous highs on Friday with the DIA, and we're trying to close that little Thursday, Friday gap, and we've closed some of it for the DIA, but nothing particularly dramatic. It's not screaming up or dropping fast or anything like that. It's meandering around in a very normal way. So I think I still have a chance to close those gaps from early June. What about the QQQs? That is a very similar situation. The Qs need to get down to 333 to close its early June. Well, actually, the one on the Qs is May 24th through May 25th, late May. Now, same thing, it's a gap and it needs to be closed, should be closed. And this formation could get it going down on its way to close the gap. Double top, possibly. Today, excuse me, we do not have a bearish engulfing yet. But look, we are only one. There we go. We now have an outside down day at this split second. Now it's unchanged. So if we keep sinking, which I think is likely, we will have a bearish engulfing. Unfortunately, we didn't get up to the overbought condition I need for a red sell signal, but it's the closest thing you could get to my official ER sell signals. So a small gap to the upside last week, Thursday to Friday, also in the Qs, and a bearish engulfing possible. Right now we're up one tick. So it's bouncing back and forth between an outside up day and an outside down day, or bullish engulfing, bearish engulfing. And that's normal when you're in this condition at the moment. The Russell 2000 I've been mentioning for quite a while now, because it got very interesting when it got up into the major resistance area, which is green, should be red, but that's good enough, green zone. And it did have a bearish ER sell signal, and it did work great. For a couple of weeks or a week or so, it dropped off pretty sharply, tried to close the same gap on the same dates, the beginning of June, didn't do the job completely, just like the spider in the DIA, blah, blah, blah. Came up, now a double top in resistance, and is starting to work its way down. A lot of parallels here. Everything's going to explode and go higher like crazy if my story doesn't pan out. But let's see what happens. Okay, futures, you guys. Wednesday, July 5th for futures markets, starting out with the E-mini, which is the same as the spider for all practical purposes. Possible minor double top. Very, very close to overbought conditions, but not quite. And close enough for government work, so to speak. No offense to you guys who work for the government. And I just need some downside follow through, which momentarily I'm not really getting much of. I'm not really happy, but I got to say what I got to think's going to happen. That's why I'm here yakking away at you guys. So, next chart. I got something brand new. I invented the Ehrlich Cycle Finder in 1977, which is now the oldest physical technical analysis tool in the investment industry worldwide. That was a half a century ago, almost. One of my expertise is cycles. So this caught my eye this morning in the bond futures chart. It is the continuation contract instead of rolling from one to another. And my comments are relative to the continuation contracts, but they're also pretty close to the exact same thing, especially chart formations and timing points to the individual month futures charts, futures contracts themselves. So the vertical green dashed lines, and unfortunately trade session doesn't tell me, and I'll show you probably in the next few days, something brand new. EC Forecaster. It does what this does much, much better. And it'll be available for TradeStation users and soon for NinjaTrader users as well. I call it the Ehrlich Cycle Forecaster, or EC Forecaster. Here we go. There's a cycle coming up. Look at the history of the cycle. In 2 days, if the market hits a low and starts to turn up, I'll be screaming bloody murder, cycle low, and support levels being tested, and close to or maybe even overbought conditions. And who knows, maybe I will actually get a buy signal, ER green buy signal. So in 2 days, we have the next one. If you're foolish enough to think that cycles are exactly on time every time, they're not. The reason for people and the foundation for the study of cycles is available. Go to their website. Great material, great research. Dr. Richard Smith is the coordinator for the organization, which just started up again a few years ago. So a cycle low is expected, in my opinion, coming up eminently this Friday. What happened one cycle time frame earlier? It picked the exact low day. Let's go back in time the exact same number of days. It picked the exact low day on October 24th. Let's go back another time frame for the cycle, and it missed by 1 day from June 17th to October 24, June, July, August, September, October. So it's a little over 3 months for the rhythm, the cycle. The last 3 were dead on time, and 1 day off. Come on, it's impossible to get better. This example, that's the reason I'm talking about it, is one of the best examples of a rhythm across cycle lows that I've seen in years. It just popped out at me. I didn't even have to draw the lines. So I drew the lines in TradeStation and I verified what I thought I had found. Let's go back one more period. We're off by a couple of days, but super close to the exact low day within 2 or 3 over a 3.5 month period. Again, we're just a tiny bit, 2 or 3 days early to the bottom day. Not close. Well, yeah, we're very close, but the bottom day was extremely close to that cycle low period of time. Now, is this considered a cycle low actually the beginning of a very strong rally? There's 3 definitions. You've already seen, in my opinion, 3 definitions. You've already seen the bottom of a break and the beginning of a rally to the exact day or super close. That is blatantly obvious, the bottom of a move and the beginning of a new move up. But what about this one back on June 2nd of 21? It's basically the end of a sideways movement and the beginning of a sharp rally. If you bought the market on that date or around that date, a couple days later, you would have made money immediately and not had too much trouble in the process. So it did start a rally. It was a good place, time and price, to be buying. Prior to that, you wouldn't have made much money or lost much money one way or the other. And it was certainly not the bottom exactly. But I like to say this is pretty good. Let's go back one more cycle, and it didn't work. I've still got pretty good, great 2, great 3, great 4, outstanding 4, 5, 6 cycles in a row that were outstanding. What about this Friday? Watch to see what happens. It could happen today, during the next week or so, but I think it's about to turn up, and it's because of a cycle I have not mentioned in the couple of hundred YouTubes that I've done so far, cyclical analysis, until today. I used to do a heck of a lot of it. Again, you can Google Ehrlich Cycle Finder. It's still on the internet, probably there forever and ever. I've sold about 20,000 of them worldwide, mostly in the late 70s, 80s, and 90s. Okay, next chart. 10-year notes. if you find a cycle in a symbol that has extremely close relatives, like a meat packing company, another meat packing, mining company for precious metals, and other mining companies, and so on, you will probably find the same cycle in those other closely related symbols, companies, businesses. So 10-year notes relative to bonds, great. 2 days from now, possible low. Anytime now. Last one, dead bullseye. Last one before that, dead bullseye. The one before that, I'd say that's pretty much a damn dead bullseye, right in the middle of 3 days where the lows are almost the same. Very close. Good. Very close. Good. Now, this cycle low wasn't very prominent. You didn't have a lot of room to make a lot of money. It really was a very modest turning point, and it was in the process of developing a long-term bear market. Cycle lows and bear markets don't do very well on the average. Then cycle lows and bull markets usually do much better for obvious reasons. And I haven't bothered to look for cycle highs yet. Maybe later. And some other cycle lows have done very well. Next one, crude oil. Sideways trading range now for a couple of months, waiting for a downside breakout. I don't think we've got much upside potential. Next, heating oil, basically the same comment, close to overbought, not yet, at resistance, just like a couple 3 weeks ago. Probably is going to turn down immediately, but there's a small rally possible, maybe up to 2.6. Next, same comments for natural gas. Energies are dropping. I don't see my gas price at the pump dropping much. Too bad. Middleman making the money. Next, gold. A little bounce after being oversold. Bear trend at the moment. No signals lately. Probably this rally is going to stop very soon and turn down to new lows. Next, same thing for silver. We caught on all three, by the way, gold, silver, and platinum, the lows of very important prominence, with every single one of them having a bullish engulfing ER buy signal. This was March 10th. And both double top highs on silver. Unbelievable. This is going to go on my website, ersignals.com. Not finished with it quite yet. Buy signal on the bottom. An unbelievable series of exact significant turning points, including a chart formation, the double top. I don't think I've ever seen that before. 52 years at this. Next. Oversold, rallying a little bit. Probably not going to go very far. We've already done some rather significant damage to the long-term support level, which was 916. For 2 or 3 days, we stayed below that, and now we're bouncing back up above it a little bit. I don't think there's that much more of a rally, so I'm expecting new lows relatively soon. This month. Platinum, that was platinum. High-grade copper, basically bearish. Not super bearish, super fast. Coming down relatively slowly, bouncing back and forth. But it did get oversold. And my comments about oversold conditions are always the same. You should expect a rally very soon in time and probably also in price. So I'm bearish, looking for new lows. Next, soybeans. Here's some profound statements, and I'm sticking my neck out as tall as a soybean plant. So Monday, during the 4th of July weekend, so to speak, we had a new high for a very long period of time. It looks like multiple years. I don't know, it could be even longer than that. Not that important. But it didn't stay above the previous highs that were made way back on June 9th of 22, over a year ago. It closed below the old highs. That's not typically a good sign. So today we're having a little trouble. It's slightly higher on the day at the moment, but we're in overbought condition Monday and today. I think we might be looking at a 1-year double top, 13 months. I will need a breakdown on a closing basis below this very accurate 1067 support level. Obviously, it's not going to happen today. It'll take weeks, if not a month or two, before that happens, if I'm right. But this is exactly how a very, very broad double top will start. Nobody will talk about it today or Monday because it doesn't look like it at first. I've seen my share of them, so I'm going to mention it now. If we start closing above Monday's high, all bets are off and there's no double top, and I'll change my tune. But your risk at this point going short on a long-term basis, very long-term, is a very small risk. But a lot of people don't like to do that because they just don't have enough technical evidence, fundamental evidence, if any, that it's going to start. I'm slightly bearish at the moment, with the possibility of being hugely bearish on a long-term basis. Next chart. Soybean oil already has started a long-term bear trend, already has made the lower lows over significant periods of time and lower highs, doing the same thing, and now is overbought again. It's about to run out of steam. We're at a general resistance area. I think today could be a high day, or we're very close to it. Next. Meal, sideways, bearish, looking for it to take out the lows of recent weeks. Next. We just took out that low by a hair, but corn did not stay down. It was and is testing a support area at 479, give or take a couple of pennies. Same thing way back here, July of 22, same price levels. And that's why we talk about support and resistance. This is exactly what happens at those important levels. I don't know why. It just keeps happening decade after decade after decade. So pay attention. You don't need to know why necessarily. You only need to know that it is likely to happen. And it sure looks like it's starting. We almost have a bullish green buy signal. We are oversold, so all I have to do is make new highs for the day by a little bit, and we'll be above the high of Monday, July 3rd, and have a bullish engulfing at a support level. Great. I expect easily a rally up to 504, but that's so close, it's ridiculous. So let's go up to about 528. That looks quite plausible. Yeah, 528 or higher. Next chart. Resistance was tested a week or two ago in overbought levels, stopped the rally, turned back down. We got a new sell signal a couple of days ago, but the problem, I explained about this on Friday, you're already very low on the RSI scale. I don't like sell signals that are very close to a RSI level, which generally creates buying opportunities. So I would not have taken the signal. I rarely say that. In our code, we're going to add the ability to look at the RSI over time and not change this to red. It will in the future, this red day on Friday of last week will go away. It'll just be yellow. Nah, it'll be white because it's not even oversold yet. So we're not going to get a green either. So I'm looking for a little bounce, but the trend is obviously down. By the way, we did catch the sell signal at the top of the wheat market at the beginning of the war. And unbelievable, you wouldn't believe when I tell you that we sold well, I'll say it this way. We got a sell signal on the high day when it was screaming limit up bid, locked limit up all day long sometimes. And we got a sell signal on the very high day on wheat. And that date was, if you don't believe me, March 8th, 22. Next chart. Recently, we got a sell signal right smack at the high in live cattle. It came down nicely for a couple of weeks. Now, I've been talking about double tops. Here's another one. We got overbought on Friday and Monday and today we start going down. The high Friday and Monday are almost exactly the same and extremely close to the high that we saw on June 7th, which was a red ER sell signal on the top. I need a close below 167 to pull the trigger on the downside breakout of this double top, but it's looking a lot like a double top, especially since it overbought right smack at the previous highs and starting to work its way down. Live hogs overbought in a little resistance area as well. Not very accurately, but pretty good. And I expect it to turn down. Next, are we building some sort of top formation in orange juice? It certainly looks plausible, possible, maybe. It could go down as maybe a head and shoulder top, but it's not finished yet, and I probably need another week or two. So watch out. Orange juice could be building a top. Cocoa screaming parabolic bull market. None of these last forever. This looks so parabolic. And the fact that for the last 2 or 3 weeks, we've been having lower and lower and lower RSI levels with higher and higher and higher prices, that's divergence. In fact, it's a very rare quadruple at the moment. So I think we're about to top out. I probably said that in the last week or so and have been wrong. But I'll tell you this much. When this tops out with a parabolic move like this, it's going to come screaming down real fast. Historically, that's what usually happens. And now we've got cotton. Boring. Sorry, Mr. Cotton. Peter Cottontail. Sorry. Very, very, very sideways. I'm waiting for a new breakout. And lastly, or second to last rather, we got sugar. It did form a double top. I know I talked about that at the time, just like I've been talking about the possible ones now. This one's worked out great. It did break out, and in 4 days, it reached its downside objective, and now we're having a rally out of an oversold condition. I thought it might oh my gosh, it actually got up this morning about almost exactly what I was talking about. So my first upside objective has just been reached today, 2380. That's probably what I said last week. I did not make a recording on Monday. So anytime now, it could turn down and make another new low. Lastly, coffee I've added to the 22 different commodities I talk about. Looks like it's going to bounce. Oversold conditions, minor support, looking for a little bit of a rally. You guys have a great day. Hope you had a great 4th of July. Signing off.